Today we're diving into the latest Tesla news, covering several major developments that could shape the company's direction over the coming months and years. This includes confirmation of new affordable Tesla models discussed during the most recent earnings call, Tesla's extremely aggressive timeline for rolling out unsupervised full self-driving, a wide range of incentives currently available this quarter, and several other important updates. There's a lot to unpack, so let's get right into it. Tesla recently held its quarterly earnings call, and while the results generally landed in line with what analysts were expecting, the numbers still reflected a noticeable slowdown compared to previous periods. Overall sales declined and income was also down year over year, which is something investors and fans alike have become increasingly accustomed to seeing in the current market environment. Tesla reported operating income under GAAP of about $900 million, GAAP net income of approximately $1.2 billion, and non-GAAP net income of roughly $1.4 billion. Operating cash flow came in at around $2.5 billion, while cash and investments decreased slightly by about $200 million, bringing Tesla's total cash position to approximately $36.80 billion. While those figures may not sound especially exciting on the surface, Tesla emphasized that its future profitability strategy is shifting. The company made it clear that it does not expect hardware margins alone to drive long-term growth anymore. Instead, Tesla expects hardware-related profits to increasingly be accompanied by accelerating revenue from AI, software, and fleet-based services. In other words, vehicle sales are becoming the foundation, not the end goal. Tesla is positioning itself as a technology and services company just as much as an automaker, if not more so, in its overall summary of the quarter. Tesla described Q2 2025 as a pivotal moment in the company's history. According to Tesla, this quarter marked the beginning of a transition away from being solely a leader in electric vehicles and renewable energy, toward also becoming a major player in artificial intelligence, robotics, and related services. This is not a subtle shift in messaging. Tesla is openly telling investors that the company they are buying into today is not just about cars. Anymore, one of the biggest milestones highlighted during the call was the launch of Elon, Tesla's first robotaxi service in Austin, Texas, which began in June. While the service is still limited in scope, Tesla believes its approach to autonomy gives it a massive long-term advantage. Unlike competitors that rely heavily on LiDAR and detailed pre-mapped environments, Tesla continues to double down on a camera-only system powered by neural networks trained on real-world driving data collected from millions of vehicles across the globe. Tesla argues that this approach allows them to continuously improve safety, scale faster than competitors, and ultimately achieve better profitability. When Tesla discussed its automotive roadmap, it confirmed that progress is continuing toward the launch of additional vehicle models later this year. This was especially interesting because it strongly supports a theory many observers have had for some time. Tesla revealed that it began initial production of a more affordable model in the first half of 2025. But it appears the company is deliberately delaying a full consumer launch. The reason for this seems strategic. Tesla is likely waiting for certain incentives, including tax credits, to expire or change, allowing the company to better control pricing margins and demand. Tesla explicitly stated that plans for new vehicles launching in 2025 remain on track, including initial production of a more affordable model that already began earlier this year. That means the car exists, it's being built in limited numbers, and Tesla is actively refining the production process. However, the public-facing launch is still ahead of us. This aligns with Tesla's pattern of quietly ramping production before making a major announcement. Rather than announcing a product years in advance and struggling to deliver on time, looking at Tesla's production capacity chart, most of the lineup remains unchanged. However, there were a few notable details. Both the Cybercab and the Tesla Semi are listed as under construction, signaling that Tesla is still investing heavily in future commercial and autonomous-focused platforms. The Roadster, on the other hand, remains in a kind of limbo. Tesla still lists its production location as to be determined, with the status marked as design development. For fans who have been waiting since the Roadster was first unveiled back in 2017, this is understandably disappointing. At this point, it's starting to feel like the Roadster could end up being delayed a full decade or more from its original announcement. Assuming it ever reaches production at all, shifting focus to full self-driving and robotaxi expansion. Tesla shared images showing FSD supervised testing underway in cities such as Paris, London, Sydney, and Rome. This signals Tesla's intention to expand its autonomy footprint internationally as soon as regulatory approvals allow. Of course, regulation remains one of the biggest obstacles. Even if Tesla's technology is ready, different countries and regions have vastly different standards and approval processes, which can slow deployment significantly. For much of the commentary surrounding robotaxis and FSD, Tesla enthusiasts often turn to updates and commentary from well-known Tesla watchers like Sawyer Merritt, whose social media posts were referenced heavily during this discussion. Elon Musk himself had plenty to say during the earnings call, particularly when it came to defending Tesla's progress on autonomy. Musk stated that Tesla has done what it said it would do, acknowledging that while timelines are not always perfect, the company ultimately delivers. He suggested that critics who doubted Tesla's ability to launch a robotaxi service are now being proven wrong. That said, it's important to maintain some perspective here. While Tesla has indeed launched a robotaxi service, it is still very limited and operates with safety drivers present. Many people are not waiting for a supervised pilot program. They are waiting for truly unsupervised, full self-driving that works reliably across a wide range of cities and conditions. Until that happens, skepticism is likely to remain. This dynamic has become a familiar theme in Tesla earnings calls. Elon Musk often paints a very ambitious picture of the future, setting bold goals that sometimes arrive later than initially promised. Sometimes they do eventually materialize, and sometimes they evolve into something slightly different. Tesla's current goals for FSD and robotaxis are no exception. According to Tesla, the company aims to have autonomous ride-hailing services available to cover roughly half of the U.S. population by the end of this year. They mentioned expansion plans targeting states like Florida, Arizona, California, Nevada, and others. However, considering that the end of 2025 is now less than 6 months away, this timeline seems extremely optimistic. Achieving regulatory approval, ensuring safety, and scaling operations that quickly would be an extraordinary feat. Still, Tesla often sets ambitious internal targets to push teams to move faster than they otherwise would. Even if the company falls short of covering half the U.S. population by year's end, a meaningful expansion beyond Austin would still represent a significant milestone. Tesla also made it clear that it intends to grow its robotaxi service beyond competitors like Waymo, both in terms of geographic reach and operational scale. Regarding the near-term expansion of robotaxi services, Tesla stated that the network is expected to grow significantly within the next couple of weeks, exceeding the size and duration of competing services. However, it's also worth noting that robotaxis are not yet contributing positively to Tesla's financials. Elon Musk openly acknowledged this, estimating that robotaxis could begin to have a material impact on Tesla's finances toward the end of next year. That suggests Tesla is still very much in the investment and learning phase with this technology. Of course, for many Tesla owners, the biggest question isn't about robotaxi fleets operated by Tesla itself. The real anticipation surrounds unsupervised full self-driving for personal vehicles. This is something Tesla has been promising for years, and expectations remain high. When asked about the current status of unsupervised FSD, Tesla explained that the company plans to gradually relax some of the strict driver monitoring requirements as confidence and safety improves across different geographic areas. One of the most common complaints from FSD users today is the requirement to remain intensely focused on the road at all times, even when the system is performing well. Tesla indicated that it intends to loosen these requirements incrementally as the system demonstrates reliability. The ultimate goal, of course, is fully unsupervised FSD. Elon Musk stated that Tesla's plan is to make unsupervised FSD It's available for personal use in some U.S. cities by late 2025. This would represent a massive shift, not just for Tesla, but for the entire automotive and transportation industry. However, as with many Tesla timelines, it's wise to treat this projection with cautious optimism. If Tesla succeeds, even in a limited number of cities, it would validate years of investment in camera-based autonomy and neural network training. It would also open the door to new revenue streams, including paid software subscriptions, ride-hailing income for owners, and deeper integration between Tesla vehicles and Tesla-operated mobility services. On the other hand, if regulatory or technical hurdles slow progress, we may see a more gradual rollout than what Musk is currently projecting. Taken as a whole, this earnings call painted a picture of a company in transition. Tesla is no longer positioning itself as just an electric car manufacturer trying to sell more vehicles each quarter. Instead, it is laying the groundwork for a future built around AI autonomy, robotics, and software-driven revenue. The confirmation of an affordable model already in early production suggests Tesla is still serious about mass-market adoption, even if it is carefully timing the launch. Meanwhile, the aggressive push toward robotaxis and unsupervised FSD shows that Tesla believes autonomy will ultimately be the defining feature that separates it from the competition. Whether Tesla can deliver on these ambitious goals within the timelines outlined remains an open question. History suggests that delays are likely, but it also shows that Tesla often gets closer to its goals than critics expect. Over the next year, progress on affordable vehicles, regulatory approvals, and real-world autonomous driving performance will be critical in determining whether this new phase in Tesla's evolution lives up to the hype.